Sometimes I describe equity market performance as a roller coaster. We started 2018 with equity market strength and growing optimism, and the Fed was so positive they were increasing rates. But all that changed in early October when Fed Chair Jerome Powell said the Fed was a long way from neutral. Investors didn't like that, the prospect of much higher rates, and the equity market rolled over in the fourth quarter. Then, the Fed worked hard to change its narrative to data-dependent, meaning they'll adjust policy based on the data. Investors eventually regained confidence and the equity market bottomed out on December 26th. So, like a roller coaster, in 2018 we saw a big climb up, followed by a more rapid descent to a bottom. Well, we started 2019 with returned optimism and a strong U.S. equity market. Then on May 6th, President Trump tweeted the U.S. intention to raise the tariff rate on $200 billion of Chinese goods. All of a sudden, we had trade war escalation and uncertainty, and the equity market again rolled over in May. But then the market stabilized at the end of May and began an ascent in June and July. Towards the end of July, more tariffs were announced, and since then, the markets have been choppy. So in 2019, equities were again a roller coaster, a rise, a quick fall, a jump up, and then choppy. When we study history, the performance of the last couple of years is actually not that unusual. The longer-term market trends higher, with lots of ascents and descents along the way. And when we look to the future, we plan for an ascent. We use an estimate of an average long-term large-cap equity return of 8% with variability along the way. We invite you to read SightLines to learn more about our work analyzing the equity market and our insights looking forward. Thank you.